selling on Wall Street. The VIX up 25%. The Dow's down 600 points. Markets have turned into the negative after a record for the NASDAQ this morning. All of this is on tensions with China. So now we talk more about the big picture here. Shana Sissel, founder, CEO of Banyan Capital Management, is with me. And it's a great day to have you on because everybody's been waiting for some sort of pullback. This one fundamentally is it's not just a pullback, but it's about China. Shana, what are your thoughts today?
Well, I think the market's starting to react to the fact that the government shutdown is extending at least another week. That was the biggest concern. The longest government shutdown previously was 1 month, and it did have economic consequences. We are now a week in, and we know that's going to last at least another week, and that's when we might start to have problems. So I think the market is starting to see that. The increase in the tensions between the U.S. and China is also weighing on the market, and I think all of those things are kind of leading to the sell-off today.
So the government shutdown has been sort of a steady story. This is day 10. As you noted, the last one was 35 days in Trump's first presidency. At this point, though, the China story shook the markets. I mean, we saw a dramatic turn with the NASDAQ at a record, only to see it down 2.5%. So we really had an about face today. Is this a buying opportunity today, or are you worried about more trade tensions with China because the president's saying he's calculating or sort of threatening more tariffs on China because he didn't like what they were doing with the rare earth controls, saying that they're holding the world captive with some of their strict controls that they put in place?
I do think it's a buying opportunity. I look at market sell-offs in two ways. Is it a structural issue? Like, is there an underlying capital markets issue? In those cases, I'm reluctant to buy on a sell-off. When it is a headline-related sell-off, especially one of this nature, I think it is a buying opportunity. Ultimately, these are things that typically get figured out fairly quickly and the market adjusts accordingly, and they tend to be good buying opportunities. So I would consider it a buying opportunity.
And, we're not getting government data, though the Fed is meeting at the end of the month. Your thoughts on what the Fed should do? People are still on board for more rate cuts.
Well, of course, people are still on board for more rate cuts. The rate cuts are able to soften markets, make debt cheaper, and therefore it can move the market higher. People obviously want that. I think that there's a couple of things worth noting, and there were some comments out of some of the Fed governors this week that talked about this, specifically as it relates to the stickiness of inflation. And this news and this tension out of China is not going to make that any better. The likelihood that causes inflation to move a little bit higher, especially considering that this is related to commodities, which are an input into some of the inflation measures, I think is concerning. The labor markets have softened, but they are still fairly healthy. And so I think right now the Fed is in a difficult spot. I think they want to cut rates. I obviously think the president wants them to cut rates, but I think that this movement in inflation trending higher is not supportive of a rate cut, especially because even with a softening labor market, it's still a pretty healthy labor market.
So when we look at, obviously we often do stock picks, but you're also looking at alternative investments. What may round out a portfolio? What are some of the things that you're thinking about here?
Yeah, so this is a perfect conversation to have as we're talking about increasing volatility and maybe a pause again from the Fed and their rate cutting policies. But yeah, so I use alternatives as a risk management tool, and there's a number of ways that we can do that. I'm talking about things that are not private equity, private credit, which get lumped into alternatives. But I'm talking about what I like to call diversifying low correlation alternatives that can help kind of manage volatility for a portfolio. Those are things like hedged equity, long short, market neutral. Managed futures is very unloved, but they are very good at having low to negative correlation to the market, and they benefit when volatility rises. All of those type of things would be something I'd be looking at in my portfolio, maybe taking a little bit from fixed income, not necessarily equity, to manage some of the risk. And those would be the things I'd look at. So some examples that fall into those buckets, and full disclosure, some of these companies do work with Banyan, would be something like BTAL, which is a market neutral fund that has shown consistently to do well when markets are volatile. Something like a CBLS, which is an active long short with a very strong short book and has been able to add alpha when markets are trending upwards, as well as when we have these types of disruptions when volatility rises. Something like if you wanted to look at, say, silver and you had a Bitcoin guest on and you wanted to do some tactical, something like BEGS, which is a Bitcoin ETH silver gold ETF that takes tactical bets, that would be another option. Those are the types of funds that I would be looking at as a way to manage risk when volatility rises.
Yeah, I saw you had BEGS here and some of the others. You had RSSX, WTIP, BTGD. Also looking global macro strategies. You had ALLW and HFGM. You also had Leidos and Marvell as picks. And those stocks are interesting, and folks want to hear why you think those have some room to go on the upside.
Well, first, I think Marvell has the tailwind of the AI trends going for it. The stock had done poorly. It had issues addressing demand. It had been losing money up to about a year ago. In its most recent earnings report, it shifted some of the business focus to the most revenue generating channels related to AI, had a very good quarter. The stock sold off, but I still think it's a good entry point and that the stock now has some significant tailwinds in its custom chip business and some of its cloud business that will help support that name going forward. Leidos is a defense company. Cybersecurity is a huge part of that business. It's obviously an area that is a major focus, especially as we move to AI, a more AI-driven technology. And so Leidos benefits from that, but it also tends to be rather defensive name because it is a defense stock. It offers cybersecurity, but it also has health options. It is walk-through security at the airport. All those machines that the TSA uses are made by Leidos. All of those things, I think, are able to help that stock continue to move through volatile periods like this. So those are the two names that I like right now. I think that even in the market volatility and with this uncertainty, they will still do quite well.
Shana, it's great to see you. Thank you so much. Great day to be on. I'm glad that we had you today and the buying opportunity that you think this really could be. Shana Sissel, founder, CEO of Banrian Capital. Thank you.